The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, boys and girls, good afternoon. This is Looking Good, Billy Ray, Feeling Good, Lewis. Almost forgot who I was for a second. First of all, I want to cover a couple quick things. The first chart that I posted in here from Norm Winsky from Astro Trends shows how he looks at some of these intraday aspects. This happened to be a major aspect with, I shouldn't guess, but I think it was Moon conjunct Neptune or something like that. But what these things are they're little timing devices. This is the type of thing that we talked about the other day when Mary Rivers did her things with the moon and Scorpio and stuff like that. And that's the kind of thing that this is that we're looking at here. However, they don't work all the time. What's good about this is that if you have a time that you're looking at, say within a 5-minute window, when you're looking at just a short term, and this is short term, folks, this is what this is about, these shorter term cycles, you'll get a spot where if it's not working after about 15 minutes and you're even or with a small loss, you can certainly protect yourself. So it's a timing device, and that's really all it is that you're working with. So just keep that in mind. A couple of things just to go through some things. I noticed yesterday that Anthony's Pier 4 in Boston is closing shop. That was one of the most famous seafood places on the West Coast. Let's try it again on the East Coast. I had a dinner there, oh my gosh, 1970, and it was really fabulous. Lobster dinners, of course, and it was really quite spectacular. Okay, now I wanted to keep alert here today, folks, because we have a potential here down about 50 pips in the Swiss franc. In fact, there's several things that I wanted to cover. But in the Swiss franc, I'll bring this up to let you folks take a look at it, because it is really really good. The funny part about this Anthony's Pier 4 is I was with Eli Lilly at the time, and I was setting up research grants for cephalosporin antibiotics, and I would fly from Indianapolis into Boston to go to Peter Brent Brigham and then go to its big hospital there in Boston. I also went to Mass General, a couple other places along that area to set up these new antibiotics that were replacing chloromycetin and some of the tetracycline, some of the really toxic antibiotics, where the cephalosporins were relatively non-toxic. Anyway, it's a long story, but the doctors took me there to Anthony's Pier 4, and of course they give you a big plastic bib and put it around your neck and everything, and of course you have a suit on and a tie. And we had this wonderful dinner. I didn't drink wine at the time, so when the dinner was over, I took off the bib, and the only place I didn't have stains was on my jacket. My tie and my shirt were just covered with all kinds of stuff. I was so darn embarrassed. But when they took their bibs off, the same thing happened. So it was really big. Yes, Terry, Lilly was cephalosporins. That started out with Keflin, and that was the product I was on, and then Loradine, and then Keflex, and et cetera, et cetera, et cetera. Anyway, let's get back onto this. I want to show you the Swiss franc, because this is a really nice pattern that's coming together. It's got all the things that you like to see in a pattern. I'll point it out to you here in just a second as soon as I can get it put into the thing here. You'll notice you have a really nice cycle going from May to October. That's nothing more than a 115-day cycle that's due to come due anytime this week. And here we are. Right now we're trading just below the 96 level, around 95, 90, I believe, and we should be getting close to 95.48. That'll be the 61% retracement of the low from October. That's another way of trying to find what the cycles. You'll see it's a beautiful ABCD pattern that is there, which makes it a Gartley. And then you also have the 786 retracement coming off of the August low. So you have a 618 off the contract low way back in May of last year. You have the 786 off the August low. So that's another one that lines up. These might not work, but this is what it's all about. This is Mother God and country. You know, this is the kind where you call St. John Bosco's orphanage and tell the sisters, hey, take some money out of the sock and put it in this puppy. This looks like it's ready to rock and roll. We know that the risk here is very, very small. So any trade below 95 would tell you that you're wrong. So you're looking around 95.50 for an entry, and below 95, you go back to the orphanage and try to make another donation. But right now, that's what it looks like. I want to share with you another chart that looks very, very similar to this. This is our chart from our good friend Jim Bartolioni, and all I got to do now, he just sent it to me. I've got it. Hello, Federal. Stop the music, shut the front door, and raise the rent. There we go. This is from Jim Bartolioni, and everybody knows who he is by now. Would you guys like to see Jim come on the show? He's a pretty cool guy, old F-16 pilot, and he really is one smart puppy when it comes to these patterns and stuff. This is what we call the Tom O'Brien special. This is the long-term dollar index chart going way back. And if you'll see that first red arrows there, where you see the first ABCD corrections, down at the tip of that arrow, right when the market was making a bottom, our fearless leader, Tom O'Brien, came out with a term called King Dollar. And believe me, it had cause. It had cause to go up, and it's still going up. What's interesting about these charts, if you'll notice the three ellipses that are there, these were the ABCD corrections that we've had along the way. And as you can see, we're coming into another one very, very shortly, about another 60 or 70 pips lower in the dollar index. This lines up pretty nicely with what the Swiss franc is doing also, because the Swiss is part of the dollar index, not much, but it is part of it. But this is the type of thing, that you're looking for. So we want to watch that very, very closely in here on this dollar index. The same thing is true of the euro. We're coming into some really, really, just a minute, in the euro, and I have to find that one too. Boy, I get these things all ready to go, and then when it comes to push and shove, I don't get to shove much. Hold on just a second. There we go. You'll see the same thing here in the euro that we're going to be watching here for just a second. You'll see that we've got a move where it's going to get up to around the 114.50 level. So that'll be an interesting one. And we're trading about 60 pips under that. And we'll see if that's going to be a pretty good thing, to look at. Now, one of the things that is causing all of this stuff, all of these problems, is the fact that we're talking about potential inflation here. And give me a second. I want to show you this chart from our good friend John Murphy. Give me a second here. Well, right after our break, we'll talk about this chart.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted a chart from John Murphy. It shows the relationship between gold and TIPS, which are the inflation-adjusted bonds. In other words, people buy these bonds when they think that the inflation's going to go up, and they use that, for some type of a protection, I guess. But the main thing I want to take a look at is if we just take a look at the TIPS bonds themselves and not overlay the gold on it, we'll see here that you've got a really nice setup for a potential top. You have a 3-drive pattern that's happened since starting in February. You'll notice that we made the 786 retracement of last year's high. We're at the 1.27 of the June high, and we're at 2-to-1 of the October high. I don't use 2-to-1 very often, but when it fits perfectly, I take a look at it because it lines up perfectly with the ABCD pattern that you see there outlined in blue. So that's one of the things that we want to be keeping an eye on right here, is to potentially be getting ready to go short this, and then we will have a better chance of seeing if it's going to work or not. But that's what we're watching as we come into this jobs report Friday, which is always a lot of fun, and we'll see what's happening. Now, we had some really interesting things, at least from a Fibonacci standpoint, that happened yesterday. I'll bring these up one at a time so that we can take a quick look at them. First, I've had a request to show the Bradley model of what we're looking at here in the market. Boy, I don't know why these charts are different this time. Boy, what did I do wrong here? Hold on just a second. Had to change it a little bit, move it around. Yesterday, we hit the 786 retracement on the on the Dow Jones. Now, the Dow Jones itself, the 30 stocks, actually went a little bit higher, but the Dow Jones E-mini contract itself did not, in fact, do that. I will post that, and you'll see that it went to the exact 78% retracement, and you'll be able to see that we're still basically in a downtrend in this. There's really not much to say, but you can see we're 3 lower highs, and so it hit the exact number yesterday at that 17,700 level. Now, if we get above that 17,700, then this is certainly going to be wrong, and we're going to go a lot higher. The odds of that happening, I'm not sure, but all I know is that you had 3 major indices hit the exact numbers. You had the 61%. Let's try it again. You had the E-mini S&P make the exact, to the tick, 786 retracement that came in at 2064.50. That was the exact number. And let's try that again. 2063.50. And we'll put this up here and let you take a look at it. And then we want to look at the cash, because that's the real market. That's not the funny business that we get with the futures sometime. And believe me, you can play games if you've got lots of money, like some Federal Reserve banks do. You can play games with these stock indices, without too much trouble. But with the bond market and places like that, it's really, really stuff. That's pretty much what you're looking for. You're asking a question about gold. I'll get to that in just a minute, but the next one is the E-mini S&P. Gosh, Larry, I'm going too fast. I'm going to slow down. It's always busy here at the end of days nursing home early in the morning, but people are struggling to get the extra tapioca that's available after breakfast. As you can see here, we had a doji yesterday. We gapped up. The high of the day was exactly 206.71, and that was the 786 from the high of the May high that we made way back when. And so that was the contract high on May 15th. May 19th. Wow. Would someone like to take my place in this show today? I'm making too many verbal errors. I don't know what I'm doing around. Now, I keep my teeth in a jar right next to the desk here so that when I have to chew on something, I can quickly put either the top ones or the bottom ones in, and then I'm okay. That's one fortunate thing about being older, is I've been able to keep most of my body parts, and the teeth, of course, are very, very important. Anyway, we had all of those come together. We still have not violated the 61% retracement in the transportations, and the question is, I really don't know the effect of what the Federal Reserve has on this, but my good friend and co-author Shane Smolian certainly does. He follows the Fed buying, and believe me, he has been spot on, and he sent me a chart yesterday showing me the last 3 days has been the strongest Fed buying, I believe, since 2011. It literally knocked the socks off of any buying that they've had. It was basically almost like a parabolic move. They were pumping so much money into the market. And I really don't know how to follow it. All I look at is the price action on the charts, and that's just telling me that we hit these numbers perfectly. Yeah, I think it means something, but how much does it mean? I'm not really certain, but that's just what I have to base it on. It just gives you a place where you want to be able to find out whether you're going to be right or wrong, because if it goes above these numbers, you're certainly going to be wrong. That's the basic thing, and that's when you say, okay, you got to pays your money and takes your choice. We've had a question about the DAX index, and I wanted to bring you up here and show you this is it over the past several weeks. You'll be able to see that we're also making that 3 drive pattern up there. This is pretty much up to date this morning, maybe within 2 hours of what the German DAX has done. You see it hasn't taken off like the other markets have done, but it is a 3 drive pattern up in that area. And that doesn't mean it can't go higher. It's just showing you that that's what you're looking at. Now, one of the other charts that we've been following for our friends over in Hong Kong has been the Hang Seng Index. And as you can see here, we've had a situation where we had a huge gap up on the 29th, and then yesterday we got up to 208.92. The high was 208.95. 208.92 was the exact 1.27 of 10 days ago, and the market sold off over 200 points to close below the old high. So it's down about 200 points from its high after making that 1.27 number. But that's just a number. That's all we're looking at. We're nothing more than that. I think of all the charts that I've shown so far this morning, I think they're all important, of course, but I think the most important is that dollar index chart from Jim Bartolioni, because that shows these beautiful ABCDs. It matches up nicely with what the Swiss franc is doing, and it certainly lines up with what the euro is doing also, because the euro is going to come into some pretty stiff resistance up in this area of the 114.50 level. Now, remember, we were talking about Treasury bonds yesterday, and they did get up to that 164.24 level. That was the high, and they broke 2 points from there, and now they're in the middle of that range. So it looks like bonds have made their top at the 382, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at that Treasury bond situation that we looked at over these last couple of days. We have seen the market get up to the 164.24 level. Then we broke two handles down to 162.22. Then we rallied back up to the 61% retracement at the 164 level. We're sitting very close to that right now. What's important about this, folks, is on the daily chart, we're also looking at that 164.24 level because in the past 2 weeks, the bonds have had this minor rally, and that has brought it up to the 382 retracement of the whole move down from the 171 and change level, way back on January the 10th. So this is telling us that the bonds are very, very close to a turning point to the downside. Now, they've already dropped 2 handles, 2 points to the downside, but that doesn't mean that the whole thing started down. You really need bonds to get below the 162 level, and then you would start to say that yes, this trend is starting to head lower. That's one of the reasons why pattern recognition is so important, is because it gets you to the point where you have to make a decision, like at the 164.20 level. You have to find out whether you're right or wrong. Now, sometimes they work, sometimes they don't, but that's the main thing. Let's get back to gold, because I'm having more questions about that than anything else. And the gold market has had some pretty good swings here overnight. We came down yesterday. We came very close to that the 1225 level. We got down, well, 12 was actually 1226. And we got down to 1224, and from that level we rallied up to the 78% retracement of the last swing that we made up around that 1245 level. We got up to 1240 and change. If we can get above 1243, 1244 today, then we've got a chance for the gold to go higher. But right now it's just setting up so beautifully that it could come down one more time to 1190, washing out the last of the weak bulls, if there is such a thing in gold. But I just don't want to tie too much emotion to this darn thing, because it looks so perfect on a long-term chart. We're going to see if it lines up or not, but it's one of those things that you'd like to see that it's going to come like that. So we'll wait and see if it's going to do that. But if we get above 1245 in the gold, then we're most probably getting ready to happen. Something really big is getting ready to happen, folks. I'll tell you why. You've got that dollar index setting up for an ABCD. You've got the Swiss franc at the ABCD. You've got the euro at the ABCD. It's just a lot of things going. You got the major indices all at the 786 retracements. The Dow, the S&P, and the Nasdaq didn't quite make it, but the S&P futures, the Dow Jones futures, and the Dow Jones all made them, and those are the ones we're looking at. And this is a very small market, folks. I know we focus on this a lot, but when you look at the money in the world, the real money in the world lies in those currencies and those interest rate instruments like bonds and notes and something like that. And since we're on bonds and notes, I wanted to mention something that I actually could not believe. One of our we have a encyclopedia here at TFNN, Mr. Fletch. Fletch reads everything that is printed. I'm absolutely sure of that, because what happened was the Irish bonds came out with a 100-year bond. 100 years. Now, I can understand somebody maybe forecasting 5 years or 7 years or 10 years and possibly 20 years, but 100 years, that's the easiest forecast to make, because you ain't going to be around to tell them that you're wrong. That's an easy deal, but no one can do that. 100 years, give me a break. Anyway, these Irish bonds at 100 years came in at a yield lower than our U.S. Treasury bonds, our 30-year bonds. I mean, that's telling the world that the world says the Irish bonds at 100 years are safer than the U.S. Treasury bonds, who's never missed a payment ever. And of course, Ireland did. They almost went tapioca. I mean, something's wrong with this picture, boys and girls. That's the main thing. None of these bonds will ever be paid off. That's the main thing that you're looking at. So you can't really, that's my sister. I hope it's nothing serious. Okay, hold on. My sister just gave a call. Anyway, I'll tell her you said hello. My sister is about as close to Mother Teresa as anybody that we can possibly get. So anyway, we'll move on to the next one. Let's get on to the gold market. We talked about the fact that we hit some of these real key areas, and whether it's going to come down to 1190 or not, I'm not sure. It just has a chance, to get there. Whether it's going to do that or not, we'll have to wait and see. But long term, the gold still has a chance to do this. Now, I wanted to show you what we're looking at here in the silver market, because the silver market has an interesting pattern that is not a bullish pattern, and I'll show it to you right here. Yeah, it is a dirty job, Fletch. Honest to God, I don't know how you can read that stuff. And when I see one that has my interest, like the one about Anthony's Pier 4, and then again about the Irish bonds, it's very, very helpful to me, because I don't read anything. I really don't. But as you can see here in the silver market, looking at this 60-minute chart, that we're looking at something that is resembling a head and shoulders pattern, and you can see it's very symmetrical. We need to get silver up to that 1570, which it's quite a ways from where it is right now, and hasn't even made the small ABCD as of yet. But the gold certainly has, but not the silver. So we want to watch this with a little bit of interest, because it could be setting up, to see if that's going to be the case. And that's pretty much what we're looking at. So what we're going to watch now is see how the market's opening, to see we have a little bit of buying, a little bit. It's about unchanged on the day, nothing too exciting happening. Let's see, the bonds are still in the area, gold still trading at 1238. So nothing's really going on yet, but something, we've got some big stuff coming pretty soon, and we'll see if this is going to be the case of these numbers holding or not. And that's the bottom line. The real serious part from a short-term technical perspective, the way I look at cycles, is the fact that we did take out that high of the full moon and lunar eclipse of March 23rd by just a little bit. We just, by a hair's breadth in the New York Stock Exchange Index. I mean, it just basically went up there and looked to see if there were any stops, and there was nothing there, and then the market went back down below it again. But they can still, turn its head and move a lot higher without any stretch of the imagination. So just keep in mind that these are all probabilities. There's nothing, nothing is etched in stone with these things. One of the charts that we've had a request to take a look at, and now we have to be able to find it. We've already looked at the Tesla chart from yesterday. One of the charts that someone's asked me about was Alibaba. This is a chart that Sarah and I have been following for more than 10 years, long before it was ever came out for opening registration. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year US dollar denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we've been asked to take a look at a stock we haven't seen in a long time, and that's Alibaba. As you can see here, I posted it. On the far left, you'll notice that when the stock came out, it had a pretty big drop. It dropped like 30% when it first came out, and it made a 3 drive to a bottom pattern down around 80, and then it went straight up from 80 to 120. And on the high day, on CNBC, the couple of the big investment fund managers for T. Rowe Price came out and said they were loading up on Alibaba and they were going to hold it forever. Well, you can see what's happened to forever. This thing has dropped in half, and that gets back to the thing is that they have no skin in the game. And I'm sure if you followed these folks' careers, they probably all got promoted. On my desk, I keep a book called The Experts Speak. And it's about 400 pages, and it's pretty small type, showing you all the things that the experts have said that have been wrong. In fact, I'm going to make a little segment here starting probably next week to show what people have said about this. I mean, there's so many of them in there that it's absolutely hilarious to listen to them. I mean, what people said. I mean, it's a great one. Of my favorites was from the Vice President, Wendell Willkie. I think it was Vice President candidate, I believe. Anyway, this was he was at a breakfast meeting in Washington, D.C. at the White House. And he said that we will never go to war with Japan, not in 10 days, not in 10 years, not in 100 years. That was on the morning of December 7th. I mean, this is a guy that's supposed to know what's happening, and, nobody knows. But just remember, the experts don't always speak, so we'll have to wait and see what's going to happen here. Okay, one other thing I wanted to mention about these experts and stuff is that in 1980, when Reagan was elected, you folks don't remember history because that's 36 years ago, but he was really a dark horse. Ronald Reagan was, an actor, and not a great actor, but he was a pretty good governor of the state of California, from what people told me. I was living there, and it seemed like it was pretty good at the time. Of course, I was working at Drexel, and things were pretty easy at that time. But when he was elected, he had to take over from Jimmy Carter, who had a really rough deal with all the hostage situation that was going on, inflation running at around 12, 13, 14%. But he did bring in Volcker, which was good. But the reason why Reagan got elected was a man that people had never heard of before, at least outside of California, and that man was Walter Annenberg. And he was a very, very influential financier. He happened to be involved with just about every conceivable business you could think of, but he was the most powerful man in California, with probably the second most powerful man being Kurt Kerkorian. And both of those, of course, were Reagan supporters, and that helped him, get elected. We're facing the same thing now, where, Trump is pretty much a dark horse, but he's a non-politician, much like what Reagan was, and that actually can be a good thing, in my opinion. These politicians, they just got the world handed to them too easily, and I'm not sure that that's the way to go. But we'll wait and see how that works out over a longer period of time. We've had questions from one of our listeners to take a look at the emerging markets, and I wanted to bring that to let you see what's happening here. We will look here. Mr. Bechtel was absolutely a very powerful man, Mr. Z. My cousin actually worked for Bechtel out of San Francisco. He's a civil engineer. He worked with them for 35 years, but Bechtel was he was small potatoes compared to Walter Annenberg. Walter Annenberg was he was the big daddy rabbit, as they say in the trade. He really moved things, and he was really a nice man. He was very philanthropic. But remember, philanthropy is related to how much money you have. You can give away 99% of your wealth if you've got, $40 billion, because you still got $400 million to play with. And, you can't spend $400 million. It's nearly impossible. All right, let's get back to the emerging markets. It's at the 382 of the 2015 high. That was way back when it was trading around 45 and change, where we had the head of the Head and Shoulder. Okay, we're also trading at the 78% retracement of the October highs from 2015. And you don't have to be too much of a magician to look at this chart and see that we have a monster ABCD pattern that occurred from 2011, and your B point was down around 2011. Your C point came in at 2014, and D came in January, and now we're having, the first rally back. Anything above $35 a share in this is telling you that this thing is going to go probably a good deal higher, at least another 10 or 15% higher. But right now, it's setting at the, proverbial moment of truth, and we'll just let the market decide what it's going to do from here. But we're certainly in a downtrend. We were in an uptrend from 2011 through 2014, even though it was at lower highs, but we still had a pretty good place to take a look at where we were at these other things. We'll have to see what's going on here, and then we'll be able to see what's going on with this overall. We'll be able to see how these things unfold. Now, I'm trying to pull up the next chart that someone's asked me about. And if you'll give me a second here, I will be able to do that. And we got a break coming up too. So one other question someone's asked me was about the oil market. And I believe we've got a real chance here. Let me get this oil chart up, and you'll be able to see what I'm looking at here. This is a oil chart on an hourly basis since the high we made back on the 22nd. Now, if you remember, this is a 60-minute chart, but if you remember, I've posted this daily chart on the crude oil many times. I don't want to keep putting the same charts in because it gets boring enough listening to my jaws go up and down. But that 42 level was an exact 61% retracement of the high we made back when the oil was trading at $60-some a barrel. Folks, something is happening in this oil market, and I can tell you why. And I don't know if this is enough personal experience, but when I left for Hong Kong, gas was $1.13 a gallon here. Yesterday, it hit $2.05. That's up 72 cents a gallon in gasoline in a matter of 3 weeks. And the futures have not done that. They've, barely rallied 35 cents. So I don't know if this is just a distribution problem in what's going on or not, but something is not going right. But the good part here is it's taken almost 10 days. In fact, today is the 10th day for the market to even make a 61% retracement. We did get below $38 a barrel, but that's neither here nor there. So we'll see what's going to happen, but we'll wait to see what's going on. I'm getting too many things here. I think we have a visitor coming in, and okay, that's it. That's probably what it is. It's probably greed coming into the market. That's my guess. We got a nice rally going in stocks now. So if I can just get my computer to work, I'll be okay. And I'm stuck again. Oh God, I hate this. Oh gosh darn. God bless it.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We have stocks have rallied a little bit. Now they've sold off a little bit. Who knows what they're going to do, but we'll wait and see. The key to watch, I believe, are these currency markets. We're getting really close to a monster ABCD in the euro at that 114.50 to 114.80 level. We're just at 114.01 right now. And I believe we're going to get there very easily because there are several targets that line up there very, very nicely, and I think that's where it's going to go. This will fit nicely with the chart for the dollar index that Jim Bartolioni gave us, and so we'll watch that very, very closely. Oh, by the way, next week on April the 6th, we're going to have our good friend Norm Winsky from Astro Trends on. He's got some important Astro stuff to be talking about that time, so we'll be looking at that very, very closely. I wanted to finish the story about Walter Annenberg because I used to do expert witnessing. I did about 35 cases for my good friend Eddie Horwitz, whose birthday is tomorrow, and Eddie was a premier expert witness in California, and I helped him on cases, and I used to have to go into the Security Pacific Bank building. It was the tallest building in LA at the time. It was, I think, 48 stories, and the top 12 floors was Gibson, Dunn, and Crutcher. That's the largest, I don't know if it's still the largest, it was the largest law firm in the western United States at the time, and it was very, very prestigious. It had the security of the CIA, and I went in there for to do a couple of cases, and on one of the cases, I had to go to a floor where there was a meeting room, and I walked in, and there was about 12 attorneys in one room, but in the other room there must have been about 30 or 40. And I asked the girl that took me up there, I said, "What's in that other room?" She says, "Oh," she said, "that's just one client. Those attorneys are just for him." I said, "Oh my God!" I said, "Who is it?" And she said, "Oh, it's Walter Annenberg." And of course I knew who he was, but it's one powerful cookie. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.